What's up, you guys? I'm Diem, this is Frugal Not Cheap, and today we'll talk about penny stocks and crypto. So I was rewatching The Wolf of Wall Street the other day, really funny movie. Anyway, it got me thinking about penny stocks, of course, and then I got to thinking about cryptocurrencies as well. Basically, the thought was, as is the title of the video, that cryptocurrencies are in many ways like the new penny stocks. They've got a similar allure, and then they also have many of the same pitfalls. So first, let's take a look at penny stocks, also known as microcap stocks. Now, I've been investing for many years, and I never really gave these any serious thought. Somewhere along the way, I just picked up that these were, extremely risky, highly volatile, and really not something to be taken seriously. And then also, of course, that it's an area that's rife with schemes and, all kinds of scams and stuff. So just something I didn't want to mess with. During the pandemic, when everyone had too much time on their hands and was looking to investing in all kinds of things, a friend of mine had mentioned penny stocks, and I thought about making a video about that at the time, but I do, but I am sure that I tried to dissuade him from investing in those. Not sure how he did. Unfortunately, he's the kind of guy that's sort of prone to following the herd, and again, at that time, people were buying all kinds of stuff. One of the things he got into was luxury watches. Now, I could smell bubble all over all this stuff, so I was pretty skeptical when he bought a secondhand Rolex. Now, I can't remember exactly when he bought it, but like with a lot of these things, when there's a mania, by the time you hear about it and you feel like you're confident that you want to jump in on it because everyone else is too, you're most likely quite a way up the price curve, if not near the end of the rally. And of course, in manias like these, eventually the bubble does pop, as we can see here in the used watch market. So this may have seemed like kind of a tangent, but actually both penny stocks and cryptocurrencies can be very much subject to these kinds of bubbles. Okay, what exactly are these micro cap or penny stocks? Well, generally, we think of them as stocks that trade for, less than $5 a share or even less than $1 a share. Then you'd really be in the pennies, right? But the Securities and Exchange Commission, the SEC, defines it as a company that has a market capitalization of less than $250 million. These can trade either on something called the OTC or over-the-counter bulletin board, where companies are required to register with the SEC, or on the so-called pink sheets, which are what they were trading in the Wolf of Wall Street. So hopefully that gives you the sense that this is a rather opaque market and there's not a lot of information about the companies that are trading on them. Even this OTC bulletin board, I'm not sure how much is available on there and really kind of how stringent the registration requirements are. But certainly with these pink sheets, it was pretty funny in the movie. They show like this little shack with a name on the top of it, and there's probably two dudes in the shed. And this is Aerotine Industries, right? It's going to be this massive, massive buy. In any case, it's a very illiquid, very opaque market that, of course, is then ripe for scams. So why would anyone actually engage in trading these things then? Well, one, there's a very low cost of entry. In other words, because they are penny stocks, shares are very cheap. You can get in on an investment or speculative play for very little. And there's big upside potential if, one of these stocks were actually to make it big. Unfortunately, however, these outsized returns are generally the ones that are earned by the scammers and not by the investors. So what kind of schemes are there out there? Well, Investopedia has a really nice list for us. So first of all, we've got your classic pump and dump scheme. This is a form of fraud that was shown very well in another finance movie that I like called Boiler Room. You see, stock prices go up when there's a lot of buying activity as we bid that price up. So the promoters / scammers who already own a bunch of the stock will sell a lot of it, thereby bidding the price up. And then as the price goes up, then they can also use this as a selling tactic to get other people to buy as well. And then at the time of their choosing, when prices have, risen sufficiently or they're starting to run out of buyers, then they can dump their holdings. This will, of course, cause the price to plummet as they're, offering the price down lower. And in fact, as the prices are falling, these scammers, who are the ones that bought very, very early and had huge gains, will then actually be selling to further suckers on the way down, most likely. And then, of course, the investors are the ones left holding the bag. Then we've got another scam called short and distort. This is the opposite of a pump and dump, where actually we want the price to fall as the scammer. So these scammers will go out there and they will short the stock. In other words, they will borrow a share at a certain price, and then of course they'll have to return it back. But if they're able to get the price to fall, then they can buy a share at the lower price, return it to this guy, and they make that profit in the drop of the price. Now, short selling is not illegal. The part that's illegal is that in order to get that price to fall, these scammers will distort. In other words, they will put out false or misleading information about the companies in order to get that stock price to fall. Then we've got what Investopedia calls the guru scam. And here I'll just say that, there's always all kinds of gurus out there that pretend to tell you that, just out of the goodness of their heart, and they're going to give you all their trading secrets in order to get rich the way that they did. And they're just doing it, out of the goodness of their heart. So long as, of course, you sign up for their paid newsletter or take their courses or something like that. And of course, actually, they don't need to just make money off of you on the newsletter or on the courses. They can also make money off of you by engaging in the schemes we just talked about, both the pump and dump and the short and distort, because now they've got a captive audience that's going to be engaging in the same trades. So it can be self-fulfilling. They put out a hot stock tip in their newsletter for some penny stock. Everybody who's receiving the newsletter goes out to buy it, bids the price up, right? You can see where this is going. Then we've got something called the no net sales fraud, but essentially here the idea is there's a stipulation that you can't sell for a certain period of time, and of course this is going to ensure that you are the bag holder. Fifth, we've got offshore rackets, and basically offshore companies don't need to register their shares in the US when selling to US customers, so they can buy some cheap unregistered shares, mark up the price really heavily, and then sell them to US customers. Now, I'm not really clear on the details of how this works, but it seems like, I guess because the US customers' ownership does get registered somewhere, there's some kind of a dilution that happens and the price falls sharply. If you know how this sort of scam works, then do please let us know in the comments. And then finally, something called mining scams. And I think this is just because there's always kind of this allure or infatuation that people can have with things like precious metals or oil. So it could be oil, it could be gold, silver, copper, what have you. And the basic idea is that a company will say that they have this discovery of these huge reserves or this big mine that they're going to start, and everybody gets super excited, buys it up, but of course, the mine doesn't exist. So this happened with a company called Bre-X back in the 90s, according to Investopedia. They said they had this massive gold mine in Burma, and this penny stock hit a market capitalization of $4.4 billion back in 1997, before, of course, people discovered this was bogus, and of course, it's, kaput now. All right, so this idea of mining actually leads me over to crypto. If you don't know much about cryptocurrency, well, especially the decentralized ones, where there's no, centralized hub that's processing all the trades, no centralized server, in order to get it done on a distributed or peer-to-peer network, the only way to do that, of course, is to provide incentives for people on the network to provide their computing power. And the incentive that's out there in things like Bitcoin and others that have this proof-to-work decentralized system is that your computer will run a algorithm, basically, crunch some numbers and solve a hard problem in order to provide proof of work. And then in doing so, in helping to update the blockchain, then your reward is to get, some Bitcoin or whatever the different cryptocurrency might be. Now, one of the problems is that as time goes on, of course, the algorithm has to become more and more complex that needs to be solved. In other words, the amount of work that's required becomes much, much harder. And so then you get to a stage where you need, these racks and racks of graphical processing units, GPUs that are really good at doing this kind of math on these huge farms, soaking up a ton of electricity, and it's just crazy. So if this sounds nuts to you, then you're not alone. It sounds completely nuts to me. There's a ton of effort and a ton of real money that gets invested into basically maintaining a network in order to keep track of fake money. So I've made a few different videos on the subject of cryptocurrencies. You can check them out. I'll have links to those in the comments. But now let's go back to talking about scams. So when it comes to cryptocurrencies, you've probably heard of, Bitcoin, Ethereum, maybe even Dogecoin, which has a hilarious logo. So while these are really, really volatile things, and I think they're really just speculative assets and not really stores of value, and they don't seem to become much use at all in the real world, there are actually thousands of coins out there that you might have never heard about. And the thing is, it's really easy to create a digital currency because, well, it's digital, and it just doesn't take a whole lot to get a project going. There's even some 14-year-old kids out there that have created cryptocurrencies. Those currencies have grown to huge valuation, and then they've liquidated, of course. And the fact that that's going on should give you a sense of really just how popular cryptocurrencies are. So I'm not sure how popular penny stocks ever really got to be, but cryptocurrencies are certainly very, very popular. Everyone seems to know about them, and a lot of people have engaged in them. But you do have many of those same problems again. You've got low liquidity, you've got very opaque markets, little information about any particular coin or project. Very wide spreads, in this case also very high transaction fees or gas fees and other fees, low liquidity, and then also the problem of offshore entities as well. Probably the most famous type of scam in crypto is what I just talked about with that 14-year-old kid. And again, we're back to the same one that was popular in Boiler Room with penny stocks, and that is the pump and dump. But in crypto, the way that it's called is actually the rug pull. Basically the idea that you pull the rug out from the investors who are actually the suckers and get screwed. Just like with penny stocks, there's a whole lot of like cryptocurrency gurus out there and personalities. Even influencers get sucked up into, the different pump and dump schemes. And then there's a lot more detailed ways that basically scamming happens or fraud happens in the crypto world. You've got things like sniping. You've got the fact that in initial coin offerings, all the insiders are already set up to make out well, and then the investors can end up holding the bag afterwards as the price plummets. But then an interesting thing that's also happened is that the cryptocurrencies themselves, things like Bitcoin and Ethereum and whatnot, have also become sort of the asset that is stolen in the scam. So, with the penny stocks, it's not the stock that is kind of taken from you in the scam. It's actually the actual hard money or the US dollar, right? That's actually being earned by the scammers. But in crypto, a lot of times there's because they're supposed to be opaque and it's hard to track down, the individual. It's supposed to be anonymous, they think. And then, of course, cryptocurrency is also involved in a lot of scams, especially social type ones like pig butchering, where someone will pretend to someone will basically befriend you and play a very long con. It can be a very, very long con, and they pretend like they're going to help you to pay off some debt or what have you, just become rich like them, and then you end up trying to trade cryptocurrency. Maybe it works at the beginning, and then they scam you with some fake website or a lot of different ways, but basically they can fleece you for quite a lot of money. And it's a pretty sad area because actually a lot of people that are involved in these pig butchering scams might be doing so against their will. Pretty horrible thing. But anyway, there's some really messed up stuff going on with cryptocurrencies, especially as you veer away from, the more well-known waters of Bitcoin and Ethereum and Dogecoin and whatnot. So I guess my take-home point is, just like with penny stocks, be very, very wary. And personally, I will have absolutely nothing to do with it. Now, I know things like, Bitcoin and Ethereum have huge market capitalizations. They've, gone through some swings over the years, but still there's a ton of money that's been, involved in this ecosystem or what have you. But as they say, the market can remain irrational far longer than you can remain liquid. Hope you enjoyed today's video. If you did, please hit the like button and consider subscribing. Thank you very much for watching, and I'll see you in the next video.